Investing is actually hard, especially crypto market is really hard. Right now, everyone is feeling the pain, but we have a lot of external factors playing out like the Fed rate hikes. Because right now, people are talking like, okay, we have never seen Fed rate hikes. That's not the fact. Crypto, yes, mostly it has been in quantitative easing, but it has also seen quantitative tightening in between a little bit. Especially 2013, you have seen 110 basis point increase, right? And how did crypto react? You have to look at that, and then there are a lot of different stuff which you need to actually look at before you decide that you are going to go crashing down. Your portfolio in crypto is going to go down, crashing down. No, you look at these factors and ask yourself what you should be really doing. This session is going to be completely facts. How the external factors like Fed rate hikes impact crypto market. How does the actual crypto market behave in general from the long term? People talk about a lot of bears, a lot of corrective trends, but what's the reality? You look at how many number of days you have gone up compared to how many number of days you have gone down. Each time when you dropped, what was the downside like? How many number of days within one cycle you actually went up? All of these are like key information. Now, if you want to really survive in the crypto market, you need to know this tactics. Why? Because in the current cycle, you are rhyming something from the previous cycle. Now, these facts will actually represent that and give you that detail so you can now decide with well-educated facts. Now, this is not a TA session. This is a fundamental session, not for an individual asset, but for an entire asset class. So stay with me till the end and let me know if you need more details about one particular sector, one particular area. I'm going to do that for you guys. Now, this one is the history of crypto, right? If you look at the history of crypto, especially first BTC cycle, then the altcoin market cycle, you need to look at both. Fine. When you look at the BTC cycle, in total, in general, we have done like 4,277 days, including the bulls and the bears. Fine. Now, if you look at the corrective trend inside that, that's 1,508 days. So, in the entire history of Bitcoin, it's been 35% of time in corrective side. So you actually get 65% of the time to the upside. So right now, if you're feeling the pain when the market is going down, understand this. This is going to pass. Why? It's BTC and you're like, no, I'm not in BTC, I'm in altcoins. It's even better. Look at this. Altcoin duration still now 3,325 days, in which you have been correcting like 900 days, 889 days to be precise, which is 26% to the downside. So you actually have even better rate to be a bull in the altcoin market. But there is a take on that. Not every altcoin does that. Bitcoin is just a single asset, but altcoins in that market, you need to dive into that and find something good, because some of them don't do anything. Some of them go crazy. Now, that's the fundamental analysis for individual assets. Now, for the crypto itself, crypto actually crashes. Yes, we know that. Fine. So if you look at BTC, right now in this area, 2020 to 2022, you can see like 3 downfalls. So one has been like 215 days to the downside, 69% lost. Then 95 days to the downside, 55% lost. Then 262 days to the downside, which is right. And we do have like 70% down, so 69.5. But before that, if you actually look at these, you get these number of days in fluctuation to the downside in a market cycle. Fine. So look at this. You get 362 days to the downside in 2018. So that's a cycle, right? So you are looking like, okay, that happened back then because that was a bear market. We entered into a bear market. Fine. Before that, the same happened in 2014. 413 days of downside and we went 85%. So 2018 cycle, we did 84. 2014 cycle, we did 85. Did you get something? No? Okay, look at the next one. 2011 cycle, we did 94% to the downside. So before this, we have dropped 84, 85%, even up to 90% in bear markets, the actual bear markets, not the corrective waves. Now, let me clarify. In each of these cycles, if you take that individual cycle and go deep inside to see how it responded like this day, I'm going to take you there. I'm going to take you there with individual cycles. But right now, look at this. This cycle, it has done 1050 days of bulls to the upside. And last cycle, it has done somewhat similar, 1057. But keep this in mind. Before that, first, it's 252 days to the upside back in 2010. Then 2011, 2012, we did 742 days to the upside. Next one, we have done 1057 days. So do you really think we are done at 1050? Like historically speaking, we are taking more number of days to reach the top. So do you think it's going to go the other way? Okay, it's up to you. Now, you go inside this particular one. So you are taking this particular cycle, 2010-11. Inside that cycle, you have like 3 move to the upside. So 35 days to the upside, 28 days to the downside, 63 days to the upside, 56 days to the downside, then 64 days to the upside. So in total, the number of up days is 162 days. 162 days you have gone to the upside, but 84 days you have gone to the downside. So initial cycle, you have done 50% bears, 50% bulls. Fine. Then slowly the market start getting attention. 2012 to 2014 cycle, inside this wave where you have done 413 days in correction after bear market, understand within that cycle where you have actually done literally 750 days of upside, it's like this. 42 days to the upside and then 49 days to the downside. Then 175 days to the upside followed by just 14 days of downside. Take this note because you have something similar running in the current market cycle. Then followed by that, you have 217 days to the upside and then 77 days to the downside. Then again, blow off the top, which is 147 days to the upside and then bear market. Fine. So you get the same here, a blow off the top, then bear market, blow off the top, bear market. You go look at 2014 to 2018 cycle. Now that one is a lot of congestion inside that because it's not clear 3-4 pumps. It's crazy, right? 49 days to the upside, 42 days to the downside, 77 days to the upside, 48 days to the downside. So you do that 6, 7, 8 times. But overall, here 581 days to the upside, 140 days to the downside. So you get 24% in bears. So 75% you are bullish, which goes in with this, the history of altcoin fluctuation. Now we come to the next one. Here 784 days of bulls and 269 days of bears. So now you go back to the major one. It's like, okay, 1059, 7 days was the total run up in which you actually got 65% to the upside. Fine, just 35% to the downside. Now if you take this average and look at the current cycle, that's again, you have something similar here. Now, this one is the key. That one right there is showing you, okay, we have actually hit that 65,000. Then we barely moved to a new high, making 69. But if you look at this, 196 days to the up, 262 days to the downside. So that downside was more than the number of days taken for the upside, which looks similar to this one, right? Fine. The next one, the upside is too long, 392, and the downside is just 95 days. Much lower, which is like this one, 175 days to the upside and then 14 days to the downside. Now, what is the key there? The next upside after this long up and short down was way higher than the previous one, 270 days of upside. So if you put that into perspective, here it's 492 days, 392 days of upside and followed by 95 days of correction. So here that should be like 450, 500 days of upside. Fine. So you actually get that point, right? Sometimes we get 50% bears, 50% bulls. So even if you combine this, you are like 300 days. You still have 200 days. What if that 200 days is going to be bull? That means this kind of gets like 500 days and then you go into a bear market. That scenario is completely possible. Now, jump onto this one. That's another important factor, right? Fed is actually increasing the rates. You know that, I know that, everyone knows that. What has the market done before when Fed was increasing the rates? Now this is key here. Look at 2013 cycle. 2013, the market increased 110 basis points. Altcoins, precisely altcoins, they did 40x in reaction. Now, when they were raising rates on that day, that week, market was kind of correcting, slowing down. But overall in that year, that cycle, boom, you did 40x. BTC did 16x. Not bad. That is still great. 2015, 2 years later, the market is doing 20 basis point push. So Fed did that and then 118% to the upside. So you're not in the downside, you are in the upside. Then next one, 130%, which is BTC on the same duration. Now, next year, 2016, Fed decides to increase the rate, and that's like another 20 basis points where the market actually decides we're going to go for 40% for altcoins and 220% for BTC. Just if you consider all this, 25 basis point hike in 2018, we went into bear market. But all before that, the market was moving to the upside. Fine. So your 2 market cycles has already experienced the Fed rate hike. Right? So when the Fed is increasing the rates, you've experienced in this cycle, you've experienced in this cycle. So yes, you have down days, you have up days, but once you understand that the macro trend is to the upside, fine, and then within that trend, you have cycles going above the mean, coming back below the mean, going above the mean, that black line. Now within that, you actually get micro cycles, right? You go above, below, fluctuating through that trend. Now if you zoom in, you're going to get even nano cycles. That's going to be confusing. That's why we are right now taking a step back, zooming out in the crypto market, and you look at these facts and you are like, okay, digest this properly. Each cycle has done this. Overall, the market has done this. Overall, it's like 35% down, 65-70% to the upside. So if you want to go short the market, trend down, it's completely up to you. If you are the expert, like the team of Jim Simons, you can do that. If they, the mathematicians, the best in the world, are doing that, and you are doing this trading against them, think how do they make money? Jim Simons, that team, Renaissance, they make a ton of money. How do they make that? They are not getting it from the holders. They're not getting it from the institutions. They're getting it from those who are trading with leverage. Understand, they're being kicked out and these guys make a ton of money. That's how they do it. So guys, if you receive value for your time and you learn something new, a new perspective, hit that like button. If you haven't subscribed yet, please do consider subscribing. And if you want to learn TA side of this, you can look at this small video. Or if you're looking to go through fundamentals, current affairs, and technical analysis of the broader market, you can look for this video. So guys, that's it for today. Bye-bye.